Welcome to Real Talk with Real Estate Pros, where we bring you exclusive interviews with the real estate experts. We'll delve deep into their journey to success and learn how to go the extra mile to serve their clients' wants and needs. Let's dive in. Here's your host, John Money McKinley.
Welcome to another edition of Real Talk with Real Estate Pros. Want to thank everyone for being here today. We have a great show coming up for you all today. And as always, I want to say thank you very much for being here. Please do me a favor, like and subscribe. We're really trying to grow my channels and grow my Facebook and be able to provide you all some really great information on what's happening in the world of real estate and mortgages. And there has been a lot going on recently in the world of mortgages as well as real estate and, of course, in the world of credit. And that is why today I am going to welcome on my once-a-month expert, Mr. Greg West. Mr. West, how are you on this fine morning, sir?
Great, bud. Glad to be back. How are you doing?
I am doing fantastic. And as always, Mr. West is hidden deep in the mountains of Kentucky, keeping the credit secrets safe and helping people get their credit lives in order.
That's right.
It's in a secret location. We don't want the government to find out where he's at. Well, we've got a lot of great things we're going to go into today. And the first thing I would like to get into is there's a lot of stuff going on in the world of credit. And there's also a lot of things going on in the world of telemarketing phone calls. And I'm sure everybody watching and listening just loves when we get all of these wonderful telemarketing phone calls. And I'm going to go into here an area that'll really show you all how you can stop a lot of this from happening. A lot of people don't realize and don't notice or didn't know this, but when you apply for credit, your credit report is pulled. And what the credit reporting agencies are allowed to do is they own your credit reports. TransUnion owns your credit report, Equifax owns your credit report, and Experian owns your credit reports. They have the ability to sell your data off to buyers that want to buy it and then solicit you. Those are what's called trigger leads. And they are especially annoying and frustrating when you're purchasing a home. And I'll just dig into this article briefly here to give you guys some information on what's going on. Congress is in the middle of working on getting a ban into place that will stop these credit reporting agencies from doing this in 2025, which would be a great thing for us. But trigger leads, the long debated controversial lead generation strategy, may disappear next year under the nationwide ban after the U.S. Senate bill, the Homebuyers Privacy Protection Act of 2024, was incorporated in the fiscal year 2025 National Defense Authorization Act. Why they put it in the National Defense? Almost kind of makes sense, wouldn't you say, Greg, to defend you from being attacked by these telemarketers?
Yeah, it's a problem for sure.
So I'm going to have to give the government credit on that one. That was a nice one there, government. Given that Congress must pass the annual NDAA budget each year, organizations and professionals in the mortgage industry are anticipating a ban on trigger leads coming down soon. The bill, Senate Amendment 2358, put forth by the Senate Armed Services Committee Chairman, and aims to broadly limit the distribution and use of trigger leads sold by the national credit reporting agencies to various mortgage companies unless the company was given proper consent, originated the loan, or has current banking relationships with the customer. What this means is when you have your credit pulled by myself, I'm a mortgage professional, or by any other mortgage person, the credit reporting agencies are going to sell that data out to any mortgage lender out there, scrupulous or not, sell it out for them to then start attacking your phone. And I've had customers, Greg, and I know you've had customers of this tell you this as well. I've had them get 20, 30, 40, up to 50 calls a day after they've had their credit pulled when they're applying for a mortgage.
Yeah. Would not the opt out pre screen stop that or no?
That's what we're going to get into. And I'm going to include this in the comments section here as well, that you will be able to actually, there's a spot you can go to, and I've actually created a video, and it's right here on my channel. I recommend that you go to it. It is actually titled on my channel. Let me go to it. I got to find out where I put it. It's called Stop the Telemarketers. And I recommend that everybody goes on my channel here and sees that, because I walk through the video is like 3 minutes and 30 seconds long, Greg. It's a very quick, simple video, but it shows people how they can stop these trigger leads from happening. And it'll take you more time to watch the video than it will to actually stop the trigger leads from happening.
Yeah, a couple minutes. I'll also mention, because I get a couple calls a week. If you're getting your credit reports online, they separate the inquiries into regular ones, which is when you actually applied for credit, and then what they call promotional PRM and AR, accounts receivable inquiries. So if you see hundreds of those on there, that's what that stuff is from. And only you can see those inquiries. They don't actually hurt your credit. A lot of people panic thinking somebody's gotten a hold of their information. So just when you get to the inquiry section of your report, just read it carefully at the top of the header, what kind it is.
Okay. Well, thank you very much for that. And yeah, this is something I want everybody to know. Please do the opt out. That'll also to stop a lot of the junk credit offers you get in the mail as well. Hopefully this is going to go through next year, but who wants to wait? And when you're in the middle of applying for a mortgage, you have enough that you have to go through to get everything together, get everything over to me so I can help you go through the underwriting process and have a pleasant experience. I recommend that all my customers do this up front, unless it's an emergency that they have to get a mortgage very, very quickly. I have them get this completed before I even run credit, because I don't want to put my clients through that. It's not fair to them. But
Yeah.
I would also like to jump into something else here. And Greg and I were talking a little bit about this as well before we started the show. And I know a lot of people were very excited when the Fed was going to drop the rates last month. Greg, you remember that, right? Was that last month? Was that September?
Yeah, well, September, and another one coming in November.
Yeah.
Yeah.
And a lot of people were saying they're going to drop the rates, and then the Fed dropped the rates by a half. And a lot of people were under the impression that the mortgages would also follow behind that.
Mm-hmm.
Surprise, surprise, surprise. That did not happen, did it, Greg?
It did not. It did not. You've got again, it has to do with the bonds, man. If they're selling them off, the rates go up. And I had just found this out right before our call, and I assume it's true because it's from Weiss Ratings. I have a subscription to them for various reasons, but they had stated in the email they'd sent me that I think China has sold off, it was either 30 or 40% of their U.S. treasuries in the last decade. And if they continue at that pace in the next decade, they won't have any at all. And they've actually been buying gold. So that's probably explains why gold's going all-time highs and rates are going up. Part of the reason. So, and China, because China has had a lot of our treasuries, of course.
So, wait a minute, Greg. You're telling me that China has been selling off our treasuries that they've been buying all these years now, which, of course, going out into the open market is less buyers going in and buying it. So what's happening is the 10-year treasuries having to raise, which is, of course, raising our long-term interest rates.
Yep. It doesn't make any sense, but they do that when people are selling to entice them to go buy, because people are basically getting out of the bonds to get into stuff that has a higher return to try to make more than what inflation's taken from them, basically.
Oh yeah, I mean it's a lot of people when I really get into what happens on the interest rates and when people are floating their interest rates. And I say floating, I mean we've got a loan application working, we have a contract, or we're doing a refinance, and they say, I want to see what's going to happen in the future with the mortgage rates over the next couple rates. And if I see some things going on where I go, hey, we may be seeing some income, we're seeing some data coming in now that may indicate we may see some easing up on the rates in the next couple weeks, we will float that rate. We won't lock it in. We can still do everything else we need to do on the loan process. The issue that we've been having, though, is the bond market has just been so volatile. And I always tell people during the floating process, you really want to keep your eye on the bond market,
Mm-hmm.
the 10-year treasury, see what's happening, because that's really going to reflect on where things are going. And we used to have it to where a lot of the times I would tell folks, hey, if you see the stock market raising, typically the bond market's going to respond. And what's happening is money's coming out of the security and safety of the bond market and moving into the stock market. Well, that over the past about year and a half hasn't quite been as true as it used to be. It's still kind of an indicator, but you and I have both seen it where the stock market is going in the tank, Greg, and interest rates are long-term interest rates are still going up, and it's like, what the heck is happening?
Man, that could be a hour-long podcast by itself, but it has to do with Federal Reserve banks intervening where they shouldn't be to make things look normal. Everything's in la la land at the moment, but yeah. And I'm not a
Exactly.
financial advisor, by the way. I'm just a dude on the internet to know some stuff.
Exactly. Nor am I a financial advisor. Please consult with a professional financial advisor as well as a CPA. I am just a licensed mortgage loan originator who can help you get an incredible mortgage and have a fantastic experience and give you and your family a great deal and help you get into your home.
There you go.
That segment was sponsored by John Money McKinley. Well, I'd like to dive into now, Greg. I know you've got a lot you wanted to get into on what's happening, and this is something that is a very important part when people are applying for a mortgage is what's going on with their debt to ratios, what's going on with their credit report. And this is a very important part, and I'm glad you came on today, and we're really going to share with us what people need to know about even if they've gotten at a point in their life where they had some problems in the past and maybe they had some of those, I don't want to call them telemarketers, but we'll call them the nice folks in the collection industry calling them from time to time.
Yeah. I tried to do these shows based on what, with my client base, the most questions that I've been getting. And a lot of it's been about debt because, unfortunately, in these times, they're getting more aggressive, man. And because I'll always ask people when they ask me about debt, well, where did you get information from? Because you're going to get different information from different people, whether it be a banker, a mortgage guy like yourself, a credit guy like myself. And man, you can get different answers depending on who you're talking to. And credit and debt are two different things as far as with federal laws. Like credit across the board is a federal law. It's 7-year statute of limitations for an item to stay on your credit that's negative, with the exception of bankruptcy filings, which are 10 years. But debt varies by state. So I started with your state because that's where you're at as far as with Texas. And you have a 4-year statute, meaning that technically once a debt hits 4 years old, you can no longer be sued. You can no longer be sued for it. It's a time barred debt. It's still out there, but you don't have to worry about as far as having any liens put on you from a lawsuit. And if you are sued, I always recommend showing up because it's a statute of limitations defense and it should be dismissed.
Now, I'm glad you brought that up because that's something I've seen, and you and I have talked about this in the past as well, Greg, especially over the past about 5 or 6 years. A lot of these credit card companies are suing people. And
Yeah.
what happens is they get a judgment against them. And just to let everybody know, now we live in what I like to call the time of 1984. In the mortgage industry, when you're getting a mortgage, we now have the ability to virtually find out anything about you. If there's any judgments, any liens, any real estate you own, any debts that you have, the days of where you could kind of skirt through the system in the gray areas or even in the areas you shouldn't be and get away with some things is no longer there. And I don't want to say that I'm trying to promote doing things wrong on the mortgage side of the business, but the time now of when you do things in the real world and when it shows up in the databases is virtually days now, whereas it
Yeah.
used to be months before.
Well, they also judgments, if you're sued, they don't show up on your credit reports anymore either. Which is one reason when I have clients enroll with me, I tell them if you're looking to buy a home, you need to get your LexisNexis report, which at least lets you know you've been sued and you can potentially start taking care of it before you try to get your mortgage.
And you know, it's funny you mentioned LexisNexis. Guess where we get a lot of our data from?
I'd say LexisNexis.
LexisNexis.
That thing's freaking scary, man. That's got, if you've been arrested, insurance, it's got everything on there. People think they have privacy. That's a joke.
No. What a lot of people don't understand is you know there's the three main credit bureaus and then there's a fourth one called Innovis. But there's also LexisNexis, and LexisNexis kind of falls into a gray area. They don't seem to have as much federal regulation as the big boys, TransUnion, Equifax, and Experian, and Innovis. And there's sometimes on the LexisNexis, but I have not seen it in a long time where there's some errors. But like Greg said, they pretty much know almost everything about you.
I had addresses from my P.O. box in college back in the daggone late 80s, early 90s on my LexisNexis
Yeah.
before I even had credit history. But yeah.
Yeah, I mean it's a very scary thing, but with all of that said is you need to make sure you have yourself in the position of knowledge and know what's going on. Yes, it stinks that there's this much data out there on us, but when you have the knowledge to know what's going on, you have the knowledge to better be able to protect yourself and keep yourself from getting into any trouble. And it just like goes, look, we know when bad stuff happens in your life on credit, you just want to get it away from you and put it in your past, which is fine. But a lot of these credit companies are going to take and get a judgment against you. Why? Because at some point in your life, the majority of people want to become homeowners. Well, guess what? If I go and I get the reports that I get when I'm getting a loan for you, and there's a judgment against you, I cannot give you a loan until that judgment is satisfied.
Yep. That's why it's important to learn the state. Every state's different. That's why I did Texas. But like in Kentucky, if you're sued here, they can put a lien on your property, garnish a bank account, garnish wages, and that'll follow you for up to 15 years here. It varies in different states, but yeah. So it's something you want to get knowledgeable about and how to fend them off.
And also, too, with the judgments in Texas, we are a very homestead state to where when you have your your home that you live in, when you have that homesteaded, you have a lot of protections against it where those judgments can't attach to your property. However, judgments can attach to any other real property that you may own, such as investment.
I believe Florida's like that too, I think, with the homestead.
And just like Greg was saying, they've only got 4 years in Texas to be able to file suit against you. But if they go into court and you don't show up and they're looking to get a judgment, I can't speak for the judges, but I would think they're just going, hey, this is just a number coming across my desk. There's no defendant here. The creditor is correct. Boom, let it go through. Judgment granted. Done.
Well, they're supposed to catch the statute of limitations from what I've read. The judges are, but I will tell you, ever since COVID, that's been a bit of a clown show because I've seen so many judgments get served where people didn't even know it happened, because you're supposed to be notified, either get certified letter or sheriff dropped off. But they were doing everything through mail, and of course everybody couldn't be around everybody, and so a lot of people have gotten judgments probably shouldn't have.
Yeah. Well, let's go here to the next part. And this is talking about the debt collectors. Can they collect a debt that's several years old? And this goes back to what you were just talking about. A lot of that really depends on the state you're in, correct?
It does. Like I said, varies by state. What I would recommend is just do a Google search that says statute of limitations for debt collection in whatever state you're in, and that way you can get you some basic general knowledge. And then your credit reports will actually have the dates of what they call date of last activity. So, like if Experian or TransUnion said this is scheduled to fall off your credit in January of 2027, right then you know that it was in January of 2020. You want to go back 7 years, so now being it's past January 2024, you'd be safe in the state of Texas as far as that goes. So you just have to do a little bit of math and a little bit of looking up on your reports to get the dates, because they're not. That's another thing we'll go through in this as well. When the debts are sold to somebody else, they're not supposed to update that activity date. That's illegal to do so.
And they do that all the time, Greg. You know that.
They
You
do.
see that when
They
you're
do.
working with clients.
Mm-hmm.
Oh,
Yeah.
wait a minute. This debt is not a new debt. This is a debt that was sold to a different collector, and because it was getting ready to be at the 7 year mark with the other collector that had it for a while. And then they
Yep.
sell it, and then they try to start that over again.
Yeah. So you gotta defend yourself, man. You gotta pay attention to stuff. They do try things like that.
And that's another reason that I put this show together, and I'm grateful that Greg takes his time every month to come on here, because especially in the time that we're in now, your credit is so important to you. And there's a lot that's happened in the mortgage world, and there's a lot that's happening going forward with mortgages and real estate. And I want to be here to be able to give this great information to you all so you have all the tools you need, because at the end of the day, stuff's going to happen. Things are going to go on. The system's going to keep moving forward in the direction it wants to move. But if you remain ignorant and don't know what's going on, you're going to get run over. I know a lot of the folks that I work with, especially my investors, they know exactly what's going on with their situations. They know exactly what's happening with their credit. Greg's talked about it. You can go once a year to annualcreditreport.com. Is that correct, Greg, or .org?
That's correct. Yep. That's
.com.
right.
Yeah, you get all three of your credit reports for free. It doesn't give you a score, but it'll at least let you know if there's something a little wonky going on there.
They've even changed it if you do it online. I think it's weekly now.
Really?
First, yeah, first because of COVID, now because of Financial Times is what it says. Yeah.
Wow. I wouldn't recommend getting it weekly, but that's a
Yeah,
good thing.
I wouldn't either.
So now people can go on there, because you have to understand sometimes stuff's going to happen. And with everything that's happened, especially over these past 4 or 5 years, things are happening and moving, and you may not even know about it, and it doesn't hurt. And I always advise people of that, especially my first time home buyers. We sit down and we go through where they're at on their credit report. And sometimes it just takes a little bit of tweaking to that credit report to take them from a higher interest rate to a much lower interest rate without doing a lot of work.
Yeah.
And that's a lot of misconception that a lot of people have, is we as lenders, loan officers, we no longer get any compensation based upon your interest rates. It's in my best interest to give you a better interest rate, because nothing is affected on my side, which in my opinion, that was one of the good things that happened during the last mortgage meltdown. It's made the playing field much more level, and it's given us as the lenders, in my opinion, the loan officers, the true professionals, a much better opportunity to focus more on, let's look at where you're at. Let's look at what you and your family are trying to do, so we can put together a game plan for you that's going to help you accomplish what you want to accomplish, whether it's your first home, buying your first home, whether it's eliminating debt so you don't have to get yourself in a credit position, in a uncomfortable credit position. Because that's another thing we've seen, especially over this past year and a half, Greg, is interest rates have gone up so dramatically. Credit card rates are what, in the 20s now?
Yeah, they always kind of have been, though, anywhere from 10, 11, 12%. Now they're up to, I've seen them at high as 29.99. I don't know if that's the cap or not, um, but unless you carry a balance on the card, the interest rate doesn't matter anyway. But yeah, they're high.
Yeah, I mean, at that interest rate, you're never going to have that thing paid off.
No.
Well, here's another article that you shared with me, Greg, about debt scavengers and zombie debt.
Yeah, I kind of touched on that already. That's basically when, like, if you stop there, it's very old debt. It's no longer old, and they call it coming back from the dead to haunt you. It's purchased from another creditor, and they buy them usually for less than a penny on the dollar. Then they just start calling everybody and harassing them. And the way I tell people to deal with this is, you don't have to talk to these clowns. I tell them if they end up calling them, answer the phone, say, hey, I don't know what this is about. Send me a bill, because you probably don't know what it's about, and they probably don't know what it's about. And later on, as we go into these articles, I'll show you where you can send what's called a debt validation letter to make them basically prove who it is and what it is if you actually owe it. And in most cases, you'll never hear back from them anyway. But it's becoming a real problem, and especially with texting. That's happening more than anything. People are getting texts for some reason. I assume people assume a text is more legitimate than a phone call, but it's all just scamish, in my opinion, what they're doing to people.
Oh yeah. And that's why I'm hoping too, with these trigger leads we were talking about at the beginning of the show, I'm hoping this eliminates that. Not eliminates it, but reduces it greatly, because these people, especially with the trigger leads, they will text you, they will call you, and they will just harass you. And of course, the collection companies are doing it. Now, on this here, you're talking about this is for the debt validation, and this
Yeah.
is
What happens is, if you read the fine print, usually at the bottom or the back of a collection notice, they're going to tell you that you have 30 days to dispute the validity of this debt. And probably I'd say 90% of the people just throw it in the trash and ignore it. So what happens is you ignore it, then it becomes a legitimate debt. Now, again, you still have the statute of limitation defense, but what you can do is you can file a letter, and as you go down through, are you going to have those links in the these links to these articles for people to get to later on?
Yes, I will. I will put them up so when people go back in, they can go back in on YouTube. They'll be able to go in and actually grab these links. And then also too, I'm going to go post this right in the comments section on Facebook right now as well too. And that way people will be able to grab these forms, so you can basically go in and use these to dispute this debt, correct?
Right. To basically make them to verify it, to validate. Like right there, you'll see where you're at now, sample debt validation letter. You click that link right there, and it'll take you right to Consumer Financial Protection Bureau website, which is a very good source of information for anybody dealing with debt and credit information. And they'll provide you with one sample you can put together. And I always recommend, same as I do with disputing credit as well, as send a certified mail. You got to have a paper trail. That way, you know they got it. They can't claim otherwise. And it gives you a paper trail. So for if a lawsuit ever comes to fruition, you've got some ammo to defend yourself.
Nice. So are you telling me the CFPB is actually giving some benefit to people today?
They are actually one of the few government agencies that are doing some work there. At least it's allegedly. But yeah, I've used them before.
No, that's actually good to hear, because I know a lot of us, especially myself in the mortgage industry, when the CFPB was first put together, we're like, oh my God. And it was such a, how should I put it, a debacle for really about the first 8 to 10 years. I mean, it was just, they were coming around with shovels and bats and knives and chainsaws going, "You're them mortgage companies. You're the enemy. We're here to attack you."
Yeah. And yeah, another whole podcast on that mess.
And then this here is, what should I do in a debt collector? Okay, that we just went through this article here. But do you have anything else you would like to dig into today and share with our guests? Because I know we're coming to the top of the hour here, Greg, and I know we've definitely dug into quite a bit on this today, Greg.
All I would add to it is, especially, I'm going to focus on mortgages because that's what this whole podcast is about. Generally, here's what I'll tell people that have old debt like that. If they're going to do any sort of a credit restoration program, you want to force them to verify or validate that the debt is even yours to begin with, because if it's sold repeatedly, who really knows? And you can a lot of times get a lot of that stuff removed from your credit reports with these tactics. And of course, if it's removed from the report, you don't have to worry about it potentially having to be paid if they apply for a mortgage. And like we talked about with you yesterday or the day before, I'd asked you, well, what happens with some of this zombie debt that's still under credit? Because like in your state, so we're 4 years old, you don't know it, but it's going to be on the credit report for 7 years. Do they have to pay this stuff? And then you went on and said what they do with the underwriting process. So you want to have good communication with your mortgage guy, because some of those debts can be removed if they're paid as well. Some companies will do that. Majority don't, because you end up just with a settlement with a zero balance with a charge-off collection on your credit.
Yeah, because there's cases that I have collections on people's credit reports, and because when we run it through, because is there a real underwriter that underwrites our files? Yes, but in the beginning, lenders such as myself, we run what's called an automated underwriting system, and it will come up and give us an approved or a not approved. And when it gives us the approval, it'll tell us what it wants to see from the borrower or borrowers to be able to make that loan deliverable to Fannie Mae or Freddie Mac. And in some cases, it will have certain collections that have to be paid off. And it really is going to depend on what the automated underwriting system says. Because unless we can validate that that debt has been satisfied or is a bogus debt, and then if that's the case, then we have to get it updated on the credit report side of things, that debt has to be satisfied. An underwriter is, and even a human underwriter is not going to be able to just go, "Oh, no, I really like this borrower. I just think I should just not have to worry about this $6,700 collection here because I like them." It just unfortunately doesn't work that way.
Yeah, so you may end up being forced to pay some of the zombie debt. Just depends again on your state that you like. Kentucky, it doesn't really matter because here they can harass you even after it's off your credit report with our statute of limitations. But
that's why you got the mountains, because you can just tell those people, "Forget you, I'm going to the mountains. You ain't never going to be able to find me."
Right, and just holler somewhere.
Exactly. Well, Greg, can you do us a favor, please? And I really appreciate you have given us an incredible amount of information today and a lot of helpful things. And I will include these links so you all can get these forms and do what you need to do to try to clean up anything if you have some stuff on your credit. But if you just go, "You know what? I don't have time to deal with this. I want an expert." Greg, please tell folks how they can get a hold of you so they can have you take the steering wheel and drive them to a spot where their credit is back in order.
Sure. They can call or text at 859-625-4546, or go to my website, westcreditservices.com, and then you can fill out a little consult form, and I'll call you whatever time you want me to call you.
Well, we appreciate it, Mr. West, and I'm going to put you back in the green room, and I'm going to say goodbye to my audience. I want to thank everyone for being here today, and please do me a favor. If you like this, leave a comment, share this with your friends and family. Greg really delivered a lot of great information for us today on what's going on with credit and how to get some things in line should you have any credit challenges. And I want to recommend, please, if you know somebody in the world of real estate that you think would be a great guest on the show that could help people out, shoot me a text. My direct text is right above there. Shoot me a text with their contact information, and I would love to meet with them. With that said, you all have a great day. See you again here next week, 11:30 Central Time on Wednesdays. You all have a great week.